The following program is paid for by the Real Estate Radio Network.
You're listening to Real Estate Radio Fresno on 105.9 The FM KMJ. Now, live in studio, your host, local real estate expert, Craig Barton.
Good morning, Central Valley. I am your host, Craig Barton, and welcome to the Real Estate Radio Network, the most important hour of radio each week, here on 105.9, the FM KMJ. Real Estate Radio is a show dedicated to bringing some rational thought to the crazy world that we live in and helping you to rebuild the Central Valley's housing and credit markets. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted advice, and that's exactly what you are going to hear every Sunday morning from 7 to 8 a.m. right here on 105.9, the FM KMJ. Thanks so much for joining us. So, Kate, do they call this cheating?
Are we cheating on Michelle?
Yeah.
I feel a little.
You feel like you're doing something wrong?
Yeah,
well, I had to ask. Michelle's on Michelle Pettis Cavalli. She's on assignment in the Pacific Northwest.
On assignment. That's
on
cute.
Assignment. Yeah, that's called a little vacay.
Well deserved.
Yeah,
well deserved.
Yeah.
That
I get one of those
hard.
one of these years.
Sometime soon. Maybe sometime this decade.
So hopefully, as long as this is not considered cheating, we can proceed.
I think that's okay. I think
go.
Michelle gave us her blessing.
She did?
Yeah.
Well, she does know about it, so I guess it's not cheating.
So then it's not cheating.
I just answered my own question. Thank you.
Good.
Well, as always, it is so good to have my special co-host, Miss Kate Island from UBS Financial Services. How you doing, kid?
I'm doing great. Happy holidays.
Happy New Year's Eve.
I know.
I did this to Michelle last week, and she's all I know is in 7 days it's Jesus' birthday, and then so many days after that it's my birthday.
Oh, when's her birthday?
I don't know.
I guess on the 1st?
That was a complex mathematical equation, and I'm sorry, but I was...
We'll ask her when she comes back.
She is a Capricorn.
Have a present for her.
I know she's a Capricorn. Let's just say that.
Okay.
All right.
You lost me already.
Already. Hey, Kate's with UBS Financial Services, our little financial expert.
Yes.
Thanks so much for being here, kid. Appreciate it.
Yeah, thanks for having me.
Thanks for getting up, especially on a holiday. Eve holiday. Well, you know what? The Real Estate Radio Network gives us the opportunity to reach so many people efficiently for one full hour for each and every week. Our goal with the Real Estate Radio Network is to get you, our listeners, the timely and accurate truth about your local real estate market so we can help bring you
back home. How did I do?
I was going to say, we didn't even rehearse that.
We didn't. I was wondering if I should have done that. So, all right.
Can I jump in?
Cool. I did it. Michelle, you're fired. Michelle, you're out.
Wow.
Sorry.
Wow. Let's take a look at some of the highlights of today's shows. Today's shows like we're doing two or something like that.
You can't stubble because it's a holiday almost.
Yeah, there you go. Exactly. Well, California home prices rise 25%. I can't wait to talk about that.
Seriously, that's exciting.
It's absolutely over the top. We're also going to take a look at today's hot property. And we have, as I mentioned earlier, Kate Island from UBS Financial Services here with our Market Watch Year in Review. We're also going to spend a little time talking about New Year's resolutions. It's about that time, kids.
I like that.
And we're going to talk about New Year's resolutions, not only personal, but as well as financial. So make sure you stay with us. You know, if you have any real estate or mortgage-related questions or questions regarding the information that Kate and myself share with you here on our show, it all starts with one call, and that's a call from you. Call us anytime. 800-979-3958. Again, that's 800-979-3958. We'd love to hear from you. You can also go to our website. Check out our resources online. You can also listen to past shows from the Real Estate Radio Network by going to REOFresnoHomes.com. To friend us on Facebook, use Press 4 Keywords.
Friend Valley-wide on Facebook.
Or use Press 4 Keywords.
KMJ Call Valley-wide.
To call into the show anytime. Man, you rocked it. Good job, kid.
I was really nervous.
You are a press... Oh, stop. Oh, my gosh. You're an expert. How many... Yeah, of the past 50 shows that we've done, you've been on half of them.
Right.
So, you're an old...
I'm good. I'm an old hand.
Sell that bag of hooey to somebody else, would you please, for crying out loud. Yeah, just use Press 4 Keywords, KMJ Call Valley-wide, and you can get connected to us anytime. Call into the show. We'd love to hear from you. Well, let's take a look at today's hot property. Today's hot property is brought to you by Perfect Home Inspections. Whether it's residential, multifamily, commercial, Just use press 4 keywords, perfect home inspections, or call Jerry Schooley today for your perfect home inspection at 352-6941. Again, that's 352. Hopefully I won't screw this up. 6941. Oh, I wasn't supposed to read that part of the
Oops.
of my prep. Gosh, dang it. Well, today's hot property is 5939 West Donner. Again, this home is a HUD home. You can go and see these, all the HUD homes at HUDhomestore.com. This property is located in Fresno, California. Zip code's 93722. It's a 3-bedroom, 2-bath, 1,987 square feet, built in 2007. It's doggone nearly new. This is McCaffrey home. Beautiful, beautiful property. Appraised for $167,000. So you figure just under 2,000 square feet for $167,000.
That's a great price.
Yeah,
where exactly is that?
Major cross streets. It's 93722, so it's west of let's see here, west of 99, south of Shaw, north of Ashland.
Okay.
I believe. This is eligible for 203B, or standard FHA financing, and the appraisal was already completed on this property, was $167,000. So the appraised value is the sales price. Could save yourself or your buyer, if you're a real estate agent, the cost of the appraisal, which is roughly around $450 in today's market. Bidding deadline daily on this particular property. That's 11:59 p.m. Central Standard Time. If you'd like more information about today's hot property, please give us a call anytime, 800-979-3958, or use press 4 keywords, KMJ hot property, and we'll send you more information about this hot property right to your phone. Look for more hot properties each week right here on the Real Estate Radio Network. Let's talk about today's market in Fresno County. I tell you what, I pulled the stats. We've currently got 1,141 active listings on the market, Kate.
That's down from where it was.
Yeah, we were 1,220 some. I think the last show you were on, last week we were 1,146. This week, 1,141. To give you a little bit of an idea as far as what we've seen in terms of trends, we sold 1,913 units in Fresno County in October. 600 units were sold in November. That was a 23% drop. And only 406 units closed to date in December.
Is that just because of the holidays?
I think the increase, what we've been seeing year to date through October, was about a 740 to 50 clip on average. I think and we had talked about this before, I think the increase in housing sales in October was a bit of a summer end rollover from late August, September, then closing in October. Now, the decrease in the number of units sold is 600 in November, and now only 403. And now, granted, there may be some, and there always is a mad push at the end of the month. But could that be much of a seasonal lull, or is there a direct correlation between that and the lack of housing inventory? Because when you look at all the other variables, interest rates being what they are, and
pricing is still favorable.
It's still
on
amazing.
a relative basis.
Correct.
Historically.
Yeah.
This might be a really silly question, but does the weather play a role in it? Because there were a couple days when it was really nasty,
People
here in
don't
Fresno.
Want to get out and shop for houses, yeah.
Right? I mean, I don't like to go out and drive around when it's raining.
There's always, and I say this, when we get to the winter months, people have a tendency to go under their toadstool, wrap up under their blanket, and they don't come out until the sun comes out. But once you start seeing sunny days, 2 or 3 weeks into January, the occurrence of folks getting out and about, it increases, and increases steadily up through March, when the weather begins to kind of normalize and you start seeing some really quote-unquote spring,
higher numbers.
Spring days.
Yeah.
And then,
Makes
trust
sense.
me, March gets here and it's all out until summertime. And then
Floodgates
summertime,
open.
then there's a little bit of a lull, June, July. And then when everyone's back from their
Then it
summer
picks up
vacation,
again.
then it picks up again.
Which, again, is surprising. I would think when school starts, there's no home shopping. It's like if you're going to move, you'd move during the summertime, or I don't know.
No, I think it's summer tends to distract folks. Folks get out of town for their summer vacations, take their kids to camp or what have you, or they go to the coast and spend a lot of time over on the Central Coast. There's a lot of reasons not to be around in Central California.
But also, I think that your point about right here, that too. I think your point about the actual active listings, the fact that the number has been going down, you're still selling then over a third of what the active listings are. Yeah. Right?
Yeah.
So that's pretty good. Well, I mean, and I know, as you know, my father is looking for real estate.
Yeah.
And he said he, put a couple offers in at asking, and didn't get any of them.
Only to get outbid.
Right.
Yeah.
And it was, a couple $1,000 here and there. But so, there are people who are trying to buy and can't buy because houses are, like you two have been saying, houses are going very quickly, and they're going for at asking or above, at least from what it seems like. It makes you
also ask the question: is how much of that really heightened competitive market that we're looking at right at the moment helps to discourage even more folks during that seasonal lull when we get around the holidays. And those agents that are not necessarily that really aren't that busy,
right,
just say, forget it, and just say, I'll come back after the first and really hit it hard then.
That could be, honestly. It's hard to know. But that's not, that's the fact that more than a third of the active listings were actually sold, I think is great.
Yeah.
So.
Yeah, definitely. Well, did you know California home prices rise 25%? Well, California home prices rose 25% in the 12 months through November, the most in 8 years. As demand rose in inexpensive coastal areas, the State Realtors Group said this past Tuesday. The median price of an existing single-family detached home was $349,300 last month, up from $279,910 a year earlier. The California Association of Realtors said the last time prices had a larger gain was in June 2004. That's scary.
No, seriously. You literally took the words out of my mouth. That's very interesting.
Yeah. In the Bay Area, the median home prices were up 26% from a year earlier at $588,800, though it fell 0.7% from October, the realtors, this California State Realtors Group said. In the Los Angeles metropolitan area, the median price was $327,840 last month, up 22% from a year earlier and 2.9% up from October. California median price was driven up by a decline in sales in lower-priced areas. Hello.
Because they've all been purchased.
Because they've all been bought. Yeah. And there's only, as Michelle says, there's only 8 properties on the market.
And she's listing 6 of them.
Exactly. And an increase in transactions involving mid- and higher-priced homes, realtors said. I also read a statistic recently as well that homes in the upper, the jumbo, super jumbo market are also seeing a pretty marked increase as well. It makes you wonder, is some of that cash that's been on the sidelines for how long is starting to come back on the market, even though we've seen, we've had all the financial quote-unquote uncertainty the last quarter of this year.
Mm-hmm. But people know if their home value is going up, so it could also be, you maybe can't move up to a bigger size home until you sell your home, and if the price of your home is getting more favorable, then you can finally sell it and move up. So maybe that's a reason too. That's great news though. Yeah. But and also earlier this week on Wednesday, the Case-Shiller numbers came out, and prices were up 4.6% across the board, and that's nationwide. So that's awesome. That's great.
It makes you, or it makes me, motivates me. But I have to be a little careful because with inventory being as low as it is, there's always that, that feeling, because it said from 2004. That's the scary part, because
we don't want to replicate anything in the housing market from the years of 2003 to 2006.
Exactly. So what do you say?
Hope
you don't get left behind, or buy now before they're gone, flying off the shelves. Blue light special, aisle 9.
It does.
It's scary. It puts a knot. Yeah, it puts a knot in my doggone stomach. Let me tell you. Protect the mortgage interest deduction. Call your member of Congress today.
Oh.
Yeah.
Yes.
Not a good thing.
Yes.
Get on the phone. Like Michelle said last week. And granted, you might think this is a little redundant. It's not redundant. It's not redundant when you're talking about one of the last bastions of home ownership. That is for sure. And mortgage rates rise. Or mortgage rates continue, excuse me. Mortgage rates rise. I got you, didn't I? It made you look. Continue at an all-time...
They did for like a week.
Yeah, they did for a week.
Right after the Feds announced QE infinity, then naturally rates went up and did the opposite of what the Fed was really trying to do. So,
and as mortgage rates keep falling, more are scratching the 15-year itch. Mm-hmm. One of the things that I wanted to say about that, or maybe ask about that, is what do you think? Do you think it's more folks... Because I feel way more fiscally conservative this time around than what I did before. And just for the simple fact that I think, when you experience a little bit of heartache, it definitely, and, someone says, don't touch that stove, it's hot. Mm-hmm. You're a little more apt to pay attention this time around.
Absolutely.
Makes you wonder if folks are saying, hey, I've got to really invest in.
People don't want to be burned twice.
Yeah.
Well, really 3 times, because you had, as far as the market goes, you had the crash in 2000, 2001, and then we had, the
dot-com
Great
crash.
Recession. Yeah. So it's like nobody wants to go through that again, which interestingly enough is why we have seen from a financial market perspective the amount of money flowing into bond funds, so the more safe asset class, is like 4 or 5 times what has been going into equities. And when I get to some of the returns in the market, it's kind of interesting because the equity markets have been doing spectacularly well from a return perspective, but people and investors are still throwing money into bonds. And so what is that? It's a fear trade.
Yeah.
It's absolutely a fear trade. That, and people are looking for yield, but it's, if you can get a 15-year mortgage at 3%, below sub 3%, you're not gonna find anybody you can loan money to for 8. You know what I mean? Like, it's like that's where rates are, and a lot of investors are willing to take those lower rates because of the safety factor. So it's interesting. Yeah, very interesting. Well, if you have any real estate or mortgage related questions or questions regarding the information that Kate and myself share with you here today on the show, it all starts with one call. Give us a call anytime. 800-979-3958. Again, that's 800-979-3958. You can also check out our resources online and go to our website. You can search for your new home at REOFresnoHomes.com. To friend us on Facebook, use Press 4 keywords. Friend Valleywide on Facebook.
Or use Press 4 keywords.
KMJ, call Valleywide.
To get connected to us anytime. We'd love to hear from you. Well, coming up, again, we mentioned we have Kate Island from UBS Financial Services with our Market Watch Year in Review. Make sure you stay with us. You are listening to the Real Estate Radio Network, helping to redefine real estate on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Mortgage interest rates are at historic lows, and there's never been a more affordable time to buy real estate. Whether you're looking for your first home, moving up, or your next income-producing property, let the mortgage professionals at Valleywide help. Valleywide Homes has been helping homeowners with their mortgage needs since 1997. When it comes to the Valley's real estate, we know our way around the neighborhood. Call toll-free, 800-979-3958. We'll put the seasoned professionals at Valleywide Homes to work for you. Valleywide Homes, NMLS number 342062, 235-952, California Department of Real Estate License 01228460. Have you ever thought about going solar? It's never been easier to go solar than with a SunPower lease. You'll start saving money the very first day. Arise Solar has a team of energy consultants ready to help you determine if going solar is right for you. Start taking control of your energy costs. Contact Arise Solar, your local SunPower Elite dealer at 449-8989. That's Arise Solar at 449-8989. Or use Press 4 keywords, Arise Solar.
Did you know that all the tickets you can buy on different websites come from the same place? Did you know that you can buy every ticket you need to any event in the country, the whole country, from Pete's Seats right here in Fresno? If that's the case, you need to call Pete's Seats. Any ticket, anytime. Sports, concerts, theater. Hey, there's seats, and then there's Pete's Seats. Premium tickets for all events, local, national, worldwide. Don't settle for a regular seat when you can get a really good Pete's Seat. Online at Pete'sSeats.net or simply 294-SEAT. That's 294-7328.
How much should I be saving? When can I retire? What can I do to ensure that my estate will be left in the hands of my family once I'm gone? Is my hard-earned money safe in today's markets?
With all the uncertainty in today's world, all of us at the Island Group know it is our job to provide answers to these questions. Walk with us, the Island Group at UBS Financial Services. Call me, Kate Island, at 559-248-4097. That's 559-248-4097, and take the first step in protecting your financial future.
All rights reserved. UBS Financial Services, Inc. is a subsidiary of UBS AG. Member SIPC.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Well, it's New Year's Eve, and it's about that time to take a look at the year in review, isn't it, Kate?
Pour yourself a cup of hot cocoa, maybe add some marshmallows, and let's talk about the market.
Wow, you're getting dangerous
I
there.
know. Well, I'm sorry,
The
marshmallows and or peppermint schnapps, whichever you prefer.
For our adult crowd.
Right. Definitely.
Thank goodness.
So it was a full year. It was a full year in every sense of the word. It was a full year.
What more could we have packed into this year from a financial standpoint?
Honestly. Well, you know what's really funny is, so our team sends out a weekly email. We just call it our Friday email.
Yeah.
And in going back through all the emails that we sent and like all the different things that went on that we were trying to explain to our clients and then say, but here's how we're framing things, we literally have an entire book, and it's all different things. I mean, everything that came at us. It was just, like I said, it was a full year.
So if there was an opportunity to say that this year was full of at-bats, you'd be swinging for the fence and batting 900, wouldn't you?
You betcha.
You got all sorts of practice.
You betcha. Yeah, definitely.
So as a year in review, where do we start?
Well, I mean, I think everybody knows right now what's going on. It's not really any kind of a big secret. But I would just say, just start with returns.
I'm over it, just so you know.
Yeah. No, put it to bed. Yeah. 2013's a new year.
Yeah.
I wanted to point out to people who are listening to the show what the returns were in various markets, because if you were to poll individual investors and ask them, what the general markets did, stocks, bonds, international, commodities, what have you, I don't think that probably 3/4 of the people would come up with these numbers. It's very interesting.
Yeah.
And it just goes to show you that even in a year that is plagued with political fighting and so much uncertainty here, abroad.
An election.
Huge elections. There were like 40 elections in various countries this year where there was a change in leadership. I mean, it was a monumental year as far as that goes. I just think you'd get very different answers as to what the market actually did. So these numbers are not through the full year, just because compliance-wise I have to get the numbers approved before I can actually say them on air. So they're a little outdated, but this gives you just kind of a general sense of where the market was. So the Dow Jones, which is a grouping of 30 stocks, was up about 11% on the year.
That's a big number.
It's huge. And the Dow is made up of companies that probably most people would recognize the names of. So it's a smaller index, but it's still one that's followed. The bigger index, the S&P 500, was up 16.28%. And again, this was through the 21st, but 16%. Those are solid double-digit returns.
Yeah.
The NASDAQ, which is a technology index, was up 15.96%, partially thanks to Apple, even though it has come off quite a bit here recently.
Right.
That's still a huge return. Small cap stocks, as laid out in the Russell 2000, are up over 16%. So all the U.S. the major indices were up double digits. Again, very surprising, especially when you look back at some of the periods this year where we had major declines. It's interesting that the markets made that up and then some.
Wow.
On the international front, the MSCI EAFE, which is a kind of a broad index of foreign countries, was up 17.45% on the year. And then emerging markets, which I will talk a little bit about later, were up almost 14%.
When you look at across the board, every single one of those numbers, Dow Jones, just under 11%, not shabby. And then to say everybody else
was up even more than that. Right. Well, and then moving on to the bond market, because stock and the bond market can obviously vary quite differently in their returns. The Barclays Aggregate Index, which is the biggest bond index, was up 4.12%. So not great, but a lot of people, if you're sitting in cash earning 4% sounds pretty good.
Yeah.
Not bad. When you take the Barclays Global Aggregate and exclude the U.S., it was up almost 5%, 4.82%. Interestingly enough, high yield bonds, as measured by the Merrill Lynch Global High Yield Index, up 19%. 19.
Give me some of that. Huh?
Yes, seriously. Our high yield funds this year did so well. It was great. And there's a reason for that, and we can kind of get into that if you want to. But moving on, tax-free bonds as measured by the Barclays Municipal Trust were up scarily, 6.66%. And then there's the T-bills. So this is for all of you sitting in cash, 0.08%. So if there's one thing I think you could take away from this, and granted, who knows what next year is going to do? Every year is not the same. But for those of you who are sitting in cash and you're worried about what the markets may bring us, I mean, again, go back through the headlines from this year. And if you just read the headlines and didn't pay attention to the market, you would have thought the market was down.
Yeah.
Almost hands down, that's what retail investors say, or the returns were very, very minuscule. So if you're sitting in cash earning your 0.08%, just taking a step into bonds, forget the stock market, you can increase your returns by 4,000% and make your 4% in the bond market. So it's just to get investors comfortable in the market. Hey, it's going to go up, it's going to go down. One thing we know, though, over the long term, and certainly this year proved it, is that cash is not making you any money.
Right.
It's nice to have at certain points in time, and we're big proponents of making sure you have enough cash on hand. Right now we're recommending clients do have a little bit more cash because we think the market's going to come off. We want to try and buy things on sale. But in general, this just tells you, if you're sitting in cash for long periods of time, you're losing. Out.
It sounds to me like you should go home, lock the door, draw the blinds, cut your cable to the back of your TV set, and then just make sure that you have your UBS Financial Services Advisor,
right.
Kate Island, on speed dial.
Put us on your speed
because
dial.
let me tell you, if you spend a whole lot of time, that's why there's such an emotional component to the market nowadays. Because of the media. Mm-hmm. It's almost better not to pay attention.
Honestly, and I think that investors before the internet, I think they had a leg up because you'd actually have to go into a newspaper and find your stocks or find your mutual funds. Maybe they're not listed.
Yeah.
And it just wasn't as easy to get
There's a degree of separation
access.
there.
And it's good that clients have instant access, but then, like you said, sometimes it's not because you just see a headline and you may want to react one way when really it's like, let your investments you didn't make your investment for a day.
Yeah.
Hopefully you made it for a lifetime or at
Right.
least a 5 to 10 year period of time. So if you're watching it every day and reacting on a daily basis, you're probably going to end up making financial decisions that don't benefit you for the long run.
Yeah.
So just to finish up, interestingly enough, the commodity index, as measured by the Dow Jones UBS Commodity Index, was down 0.92%. So commodity prices came down. It's a reason why inflation maybe wasn't, in certain areas at least, wasn't as high as some people would think it is. But the precious metals index, the Dow Jones UBS Precious Metals Index, was up 5.4%. So for all you gold bugs, gold and some silver, platinum, palladium, those precious metals did do better than the general commodity index. So I just thought that was interesting. In addition to that, so looking through some of the market returns, surprisingly, financials were the best performing sector.
Really?
This is through December 10th.
Yeah.
Would not have thought that the banks would be taking that. Yeah. And then healthcare, which I think definitely makes sense.
Yeah.
The worst performing sectors were energy and utilities.
Which boggles my mind.
Yeah, but that's part of the reason why commodities were down. So oil prices are actually down on the year.
Right.
Yeah, and so I think part of that's the fiscal cliff.
So oil had a huge hit on that, you think?
Oh yeah, because it's a big component of any commodity index. But a lot of the industrial metals, the base metal, copper, iron, that kind of thing. Aluminum had a kind of a bad year, so you got to mix all those together. But that's why I wanted to separate out precious metals, because gold is a
hot
investment
topic.
theme.
Yeah.
Absolutely, it is. Yeah. So just interesting. The markets actually performed fairly well.
Because when you strip solar, we had a show on solar, and we started talking about solar and the future of solar. Mm-hmm. You strip that out there, that number could be way worse.
Alternative energy actually performed terribly this year. Yeah, not very good at all.
Wow.
Yeah, which is interesting. And again, like you think of it, I mean, I know people who've put solar on their house, they're very happy with it. You think the demand is going to be there, but I think that was probably overshadowed. I mean, obviously we had some political issues with Solyndra and that kind of, that may have scared some investors away. Right. But the big story of natural gas and oil and all that we found here, in the shale fields, I mean, that may have overshadowed the need for immediate alternative energy sources, and I think that probably led to some weakness in that sector.
Gotcha. Because there really is nothing immediate as far as alternative sources.
No.
We're heading in that direction.
We're heading in that direction, yeah. But I think immediately, natural gas is
probably They say coal is big too.
Coal, surprisingly enough, coal is actually, nat gas may have overtaken it this year, but it was like one of the biggest sources of electricity in our country. Yeah. You don't think of it, but it's huge. But with Obama winning a second term, it's likely that will
not be
continue to go down, a little bit. So because it's a dirty energy. Essentially, I don't have anything against coal, but it's,
why is it?
When you're looking at the environment, I know. So it was very interesting year. I mean, with the elections, with Obamacare / ACA, whatever you want to call it, just all of the political fighting, and that's just here. We haven't even gone across the pond to Europe, which is could still take headlines every day, but we've kind of taken that over, towards the end of the year with all the fiscal cliff business.
Soon enough, we'll be back talking about Greece and Spain and the Ukraine
shortage.
And
Yeah, exactly. I don't know if you heard this, but the Spanish government is allowing, so if you want to come in and buy a house in Spain, they will actually give you your green card. That's how badly they need housing prices to start increasing there. Is they're literally, you come in and you buy a house, you're welcome here. Always. It's
funny you say that because I saw a story over this last week, and it was talking about they have a lottery in Spain, and it's like El Gordo, they call it. And
really?
Yeah, it's serious.
That's funny.
And instead of having like 2 or 3 winners to share the lottery, they have like 2,000 winners.
Is that like the government just like making it rain on all of its people? Like seriously?
It's been that way for over 100 years, they say. And the interesting thing is, it was not taxable until now, but after January 1st, the winnings are going to become taxable.
Really?
Yeah, and they also said a statistic that it's a good thing that this is the way it is, because the below 28 or 26 population.
50% unemployment.
50% unemployment. Mm-hmm. Yeah.
Yeah, no,
Isn't
it's
that
terrible.
wild?
Yeah. Well, here in the U.S., the young people's unemployment number, I don't know exactly what it is, but it's higher than the national average, I know. And that's a big problem.
Yeah.
That's a big problem. But 50% of your young people. And then I think there was some statistic a couple months ago that 25% of men, and this again is in Spain, aged, it was like 30 to 55, somewhere in that kind of middle age range, 25% of those men were unemployed. So you think about family dynamics, a lot of the times the male can be the breadwinner, or at least is contributing towards that. If that person is unemployed, that's a big problem for their economy. Yeah. So everyone's kind of waiting for Spain to say, yes, please, we need a bailout, but they don't want to yet agree to the terms of what they would have to do in order to get that money. So, and Greece went ahead with their second restructuring. No, so they've defaulted again. It was like a blip in the headlines here in the last couple of weeks. It was like nobody cared.
I don't think we can do it after all. So
sorry.
Can we get a redo?
Drink some more Ozo.
Yeah, there you go. Again, if you have any real estate or mortgage related questions or questions regarding the information that Kate and myself are sharing with you on today's show, give us a call. It all starts with your call. Call us anytime. 800-979-3958. Again, that's 800-979-3958. We'd love to hear from you. To friend us on Facebook, use press 4 keywords, friend Valley White on Facebook, or use press 4 keywords, KMJ, call Valley White.
I just wanted to see if you could actually do that.
So how'd I do, Kate?
You did great. You sound amazing.
We're going to continue our conversation with Kate Island from UBS Financial Services, again with our Market Watch Year in Review. Make sure you stay with us. You are listening to the Real Estate Radio Network, helping to redefine real estate here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
All it takes is one call to the professionals at Valleywide Homes, and you'll start building wealth in real estate. Whether you're looking for your first home, moving up, or your next income-producing investment property, let the experts at Valleywide Homes help. There's never been a better time to get into the real estate market. Visit our website at reofresnohomes.com or call toll-free 800-979-3958. That's 800-979-3958. And put the seasoned professionals of Valleywide Homes to work for you. Have you ever thought about going solar? It's never been easier to go solar than with a SunPower lease. You'll start saving money the very first day. Arise Solar has a team of energy consultants ready to help you determine if going solar is right for you. Start taking control of your energy costs. Contact Arise Solar, your local SunPower Elite dealer at 449-8989. That's Arise Solar at 449-8989. Or use press 4 keywords, Arise Solar.
Did you know that all the tickets you can buy on different websites come from the same place? Did you know that you can buy every ticket you need to any event in the country? The whole country. From Pete's Seats right here in Fresno. If that's the case, you need to call Pete's Seats. Any ticket, anytime. Sports, concerts, theater. Hey, there's seats, and then there's Pete's Seats. Premium tickets for all events. Local, national, worldwide. Don't settle for a regular seat when you can get a really good Pete's Seat. Online at peteseats.net or simply 294-SEAT. That's 294-7328.
How much should I be saving? When can I retire? What can I do to ensure that my estate will be left in the hands of my family once I'm gone? Is my hard-earned money safe in today's markets?
With all the uncertainty in today's world, all of us at the Island Group know it is our job to provide answers to these questions. Walk with us, the Island Group at UBS Financial Services. Call me, Kate Island, at 559-248-4097. That's 559-248-4097, and take the first step in protecting your financial future.
All rights reserved. UBS Financial Services, Inc. is a subsidiary of UBS AG. Member SIPC.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Well, as we mentioned, we've been talking with Kate Island from UBS Financial Services. Kate, happy Sunday morning.
Thank you.
Let's keep the ball rolling. So we've been talking about 2012. Mm-hmm. It just blows my mind when I say 2012. So let's talk about what to expect as far as 2013 is concerned.
Yeah. I personally think it's going to be another kind of wacky and exciting year. That's not a technical term, by the way. But, I think there's...
That's not a financial services term?
Somewhat similar to this year in that I think there's going to be a lot...
Why expect it to stop? That's what I mean, seriously.
Good luck with that.
Yeah, good luck with that. Who's gonna bridle this horse? I don't think anybody.
I don't know.
think anybody in the current administration has the firepower.
Yeah, I don't know. I mean, we'll see. I think the first quarter is going to be pretty exciting. But important to note, my firm, UBS, and our wealth management research team does think that the S&P 500 will hit 1540 by year-end 2013. So that's a return of anywhere from like 7 to 9% from current levels. So, hey, if we got there, if we could get 5, I would take that all day long.
Yeah.
All day long. Yeah. UBS does favor more cyclical sectors, so they think, essentially, by saying that, they think that the consumer is going to continue to
drive that.
Yep. Mm-hmm.
Gotcha.
But especially technology and industrials. So I think that's interesting. So if you're, looking to place some sector bets, I think that's, you or at least you want to make sure that you have good representation there. Our team personally really likes technology.
Yeah.
I mean, all you have to do is look around and see everybody on their cell phones and know that there's obviously big things going on. But it's more than that. Yeah, I mean, you think about technology in healthcare.
Yeah.
You think about technology in like food production. There's a lot of technology that goes into that. So I think that will be you want to make sure you have good representation in those sectors there. But like I said, I think we're pretty much guaranteed it's going to be an exciting start to the year. We shall see. Timmy Geithner said that we're going to hit our debt ceiling tomorrow.
Tomorrow?
Yes. Well, this is the technical debt ceiling, but they can play a little shell game for a little while
to postpone that. So likely, we're going to keep paying our bills, so that'll be fine at least until like the end of February, and then we'll see what happens. Maybe something. I just don't get that. I do not understand. I don't know. Somebody take the checkbook away from that kid.
I can't.
Yeah.
My New Year's resolution is to stay happy
Yeah.
and positive. So I'm
And
gonna
talk
leave that
about
one
things
alone.
that you have control over, right?
You got it.
There we
You
go.
got it. You got
I love it.
Yeah.
Love it.
But beyond 2013, though, I thought it was important just to talk about a couple of long-term themes that investors should be paying attention to. And I think that honestly, the biggest one is aging demographics. And
I don't see how you can not talk about aging demographics. I mean, really seriously.
It's a huge story, not just here, but in many other developed countries.
Yeah.
People are getting older, and we have less
And living
people
longer.
and living longer,
Yeah.
and we have less people in the working force
Yeah.
who are essentially then paying for the people who are not in the workforce.
Yeah.
The working age population in Japan is already falling. And it's gradually declining in Europe, and the working age population is expected to stop growing by 2020. So that means that you've got more retired people than working people in Japan. It's trending that way in Europe.
Yeah.
And this kind of growth boom in China as far as their younger population. I mean, those people are now going to get older, and then they're going to start retiring. And because of this whole one-child thing, they're not going to have the population to back it up. So it is a big issue. The reason it's a big issue is because GDP, which is the way that economic growth is measured, it's a function of output per worker. So a decrease in the number of working people is just going to drag on GDP in general. And I mean, already, here in the U.S., we are in a lower growth mode. I know that the third quarter GDP numbers came in quite a bit stronger than people had expected, but I don't think that's a trend.
That's going to get counteracted by fourth quarter GDP.
Yeah, and like first quarter recession that we may or may not be in. Yeah, So just those two items, I think, are a big deal. That it's not just here; it's in several countries. It's a big drag on GDP, but it's also a huge increase for the cost of healthcare. Because as you get older, there are all kinds of charts you can find on it, which is interesting, I guess, to see. But the cost of healthcare as you get older, you take the chart that I saw, kind of took it decade by decade. It was like exponential increase. From your 60s to your 70s, and then your 70s, especially to your 80s,
it's just
you pay so much more money in healthcare. And interestingly enough, so in 2010, the percentage of our economy that was spent on healthcare was 7.6%. So that's a pretty good amount.
Good chunk.
In 20 years from then, by 2030, it's going to reach almost 13.
Almost double.
So almost a double. Yeah. And the issue with that, I mean, there's many issues with that, but when you already have a strained public financial system, as we do here, and then that pension costs are rising, it just puts an even bigger strain on public debt. So that, I think, in and of itself is a big long-term theme. For us, it's like, okay, well then from an investment standpoint, what do you do with that? As we have said a couple times on this show, invest in healthcare. If you do not have some kind of healthcare representation in your portfolio, I really think that you should. I mean, you need to look at asset allocation and kind of what your needs are, but that would be an area. It's like you definitely want to be putting some money there slowly. Don't go crazy with it. Because there's lots of sectors that we like, but I would say that. I think what's interesting, though, is like this fear then of government finances deteriorating even further will likely lead people to invest even more conservatively. So, we do think there's going to be some issues in the bond market because of the potential for rising rates. But if people still have this fear, and if, government finances don't start getting any better, that's likely to hold a lot of money back on the sidelines. So probably you bond investors are going to be okay. Yeah, I mean, pick and choose your spots. But I think that, from an investment standpoint, I think that's something that you should absolutely be paying attention to. And maybe, as far as investing in Japan, maybe you want to shy away from something like that because they have an egregious example of what we're facing here as far as, working age population and that kind of thing.
Wow.
So that's one big theme. Not super positive, but it's a theme to look out for anyway. Another one that I just think to pay attention to, because of the volatility that could create, is deleveraging.
Okay, explain that.
Yeah. So we all borrowed too much money from early 2000 to, 2006, 2007.
I'm tearing up.
I know.
Okay, I resemble that. All right, next.
Okay.
We're talking about it.
But I said we all. Okay, I'm throwing the we out there. From a private sector standpoint, so like personal debt, that number has been coming down.
Sure.
So people are starting to pay off their credit cards. They're taking some personal responsibility, which is great. Unfortunately, along with that, our government has been levering up.
Yeah.
I mean, if you just look at what the Feds decided to do a couple weeks ago, they're essentially helping the Treasury print another $85 billion a month. So that by the end of this year, beginning of 2014, they're going to have about $4 trillion on their balance sheet. So the effect of the government having is levering up at the same time that, people are trying to not have as much money on their credit cards and that kind of thing, I think could really cause a volatile situation. So this is, from a longer term perspective, it's going to hamper growth. Once governments have to start reversing course, which, maybe we'll see that next year, you can't spend as much, you can't just keep issuing, taking out the credit card and spending money. If you have private sector deleveraging, so, spending less on credit, and then if at the same time governments start doing that, it's going to hurt the economy a little bit. So we just want to prepare people that we could be in a slower growth environment.
Yeah.
Although this year proved everybody completely wrong because the markets were up, double digits.
Yeah.
But I think that from a longer term perspective, don't be shocked if you see low growth numbers.
Yeah.
It shouldn't surprise you. You need to plan your portfolio around that kind of thing. Take advantage of opportunities like healthcare, like the natural gas and oil boom, those kinds of things as they come along, because those opportunities may be fewer and far between.
And pay attention to trends.
Absolutely pay attention to trends. And if you want to look on the other side of that, so it's great, like the U.S., we've got an aging population and our government's borrowing too much money, and at the same time, when that reverses course, what happens? Well, let's look then to areas of the world that are not doing that.
Yeah.
Emerging markets. And some people were a little scared of China's growth this year, but they're still growing at almost 4 times what we're growing
rates,
at.
yeah.
Their middle class is getting richer, and as because we're importing a lot of their goods, it's literally lifting millions of people out of poverty. It's great for the global economy. So actually a theme for our team for next year is to really make sure that our clients have a good size allocation to emerging markets, because that's where the growth is around the world. And it's not just China. Where are the Olympics in 2016? Rio. So, I would look to the Latin American countries as well for good growth.
There could probably be a strong argument for a number of different areas globally that could be great areas to
Huge
focus
investment
in.
themes, yeah. I think the joke was being made this year because Goldman Sachs was opening an office in South Africa, and so the theme, the joke was well, that's where you want to be investing. Yeah. Goldman
Goldman's going there.
They just landed there, yeah. So I think that again, I would look for those specific sectors. You want to maintain a balanced approach to everything, but definitely take advantage of the opportunities when they come, and don't be frightened if you see volatility in the market, because we know that it's a possibility, right?
Yeah.
I guess if that makes sense.
Well, there you go. Again, if you have any real estate or mortgage-related questions or questions regarding the information that Kate or myself share with you on our show, it all starts with one call. Give us a call anytime, 800-979-3958. Again, that's 800-979-3958. We'd love to hear from you. You can also search for your new home by checking out our resources online at REOFresnoHomes.com. To friend us on Facebook, use press 4 keywords.
Friend Valley Wide on Facebook.
Or use press 4 keywords.
KMJ, call Valley Wide.
To get connected to us anytime. We'd love to hear from you. Well, coming up, New Year's resolutions redefined for 2013. Make sure you stay with us. You are listening to the Real Estate Radio Network, helping to redefine real estate here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Mortgage interest rates are at historic lows, and there's never been a more affordable time to buy real estate. Whether you're looking for your first home, moving up, or your next income-producing property, let the mortgage professionals at Valley White help. Valley White Homes has been helping homeowners with their mortgage needs since 1997. When it comes to the Valley's real estate, we know our way around the neighborhood. Call toll-free, 800-979-3958, and put the seasoned professionals at Valley White Homes to work for you. Valley White Homes, NMLS number 342062. 235-952. California Department of Real Estate License 0122-8460. Have you ever thought about going solar? It's never been easier to go solar than with a SunPower lease. You'll start saving money the very first day. Arise Solar has a team of energy consultants ready to help you determine if going solar is right for you. Start taking control of your energy costs. Contact Arise Solar, your local SunPower Elite dealer at 449-8989. That's Arise Solar at 449-8989. Or use press 4 keywords, Arise Solar.
Did you know that all the tickets you can buy on different websites come from the same place? Did you know that you can buy every ticket you need to any event in the country? The whole country. From Pete's Seats right here in Fresno. If that's the case, you need to call Pete's Seats. Any ticket, anytime. Sports, concerts, theater. Hey, there's seats, and then there's Pete's Seats. Premium tickets for all events. Local, national, worldwide. Don't settle for a regular seat when you can get a really good Pete's Seat. Online at peteseats.net or simply 294-SEAT. That's 294-7328.
How much should I be saving? When can I retire? What can I do to ensure that my estate will be left in the hands of my family once I'm gone? Is my hard-earned money safe in today's markets?
With all the uncertainty in today's world, all of us at the Island Group know it is our job to provide answers to these questions. Walk with us, the Island Group at UBS Financial Services. Call me, Kate Island, at 559-248-4097. That's 559-248-4097, and take the first step in protecting your financial future.
All rights reserved. UBS Financial Services, Inc. is a subsidiary of UBS AG. Member SIPC.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Okay, when you're talking about New Year's resolutions, let's take a look at some of the most common New Year's resolutions that we see. Number 1, spend more time with family and friends. Number 2, fitness.
Yeah, that's a big one. That's a big one for everybody usually.
Number 3, tame the bulge. I think that's related to fitness.
Yeah, most definitely.
At least I hope it's related
That's
to
diet,
fitness.
yeah.
That's diet. That's waistline, yes. Number 4, quit smoking. Mm-hmm. Number 5, enjoy life more. Number 6, quit drinking. Sorry, I just can't.
That sounds like a terrible New Year's resolution.
Well, if you don't have a problem, then it's not a problem.
Ah, right.
There you go.
Okay.
Get out of debt. Number
Yes.
7. So that's a good one.
Yes.
Let me tell you. Number 8, learn something new. I'm surprised that's not higher up on the list.
Yeah.
Number 9, help others.
People are very charitably inclined.
Yeah, like we were talking about before the show.
Yeah.
From success to significance. Important.
Very cool.
Yeah. Number 10, get organized.
That's a big one.
Yeah, very common. So let's talk about financial objectives or resolutions.
Yeah.
Give us an idea of
I definitely think
where to start.
the getting out of debt one is a big one. And it's not insurmountable to tackle those kinds of issues.
Whether it's your mortgage, whether it's an automobile.
Yeah, whatever it is, credit cards. And the first place you have to start is like addressing the issue, knowing that you have a problem. So, which means that from
Don't
a
act like the
financial,
government.
right? No, but what that means is like you need to know then what you're spending.
Yeah.
To know
Have a budget.
Have a budget, exactly. Mm-hmm. But really, before you even set a budget, I would say figure out what you're spending, and then you can set a budget from there.
Yeah.
If you go through, we have like we call it our budget worksheet, but it's basically just a spreadsheet that can help people track their spending on a monthly basis.
But a good place to start.
Yeah. But if you're spending $100,000 a year, don't give yourself a budget of 50. That probably seems impossible.
Right.
But if you're spending 100, maybe give yourself a budget of 85. You know what I mean? So you can kind of make small cuts. So that's what I would say the biggest thing is figure out where you're spending your money.
Yeah.
Usually things like travel, food, and food, I think, and clothing and then cash withdrawals are those big places where people tend to have an overabundance.
I bet you a huge part is just figuring out. It's like financial GPS. Figure out where you're at.
Exactly.
Let's start there first.
And that's exactly what you have to do. It's like a good financial planner really can't help you if they can't help you assess where you're at currently, because then they can't give you any sort of trajectory as to where you can go from there.
Yeah.
So it's silly to start, sometimes we have clients or referrals that come to us and, they'll have, a pot of money and it's like, I want to get this invested, but it's like, okay, how? Make money. Naturally, yes,
Naturally.
that is in fact why we are employed, is because we make people money. But it's like, how do you want to make money? What kind of risk do you want to assume over what time period? Look at your budget, those kinds of things. So I would say that from a financial standpoint, that's a good resolution.
I would say
figuring out your finances.
The first thing that they need to do is call Kate.
I like that.
248-4097, right?
You got it.
248-4097. Again, if you have any real estate or mortgage-related questions or questions regarding the information that Kate and I share with you, give us a call. It's just one phone call, and it's a toll-free number, 800-979-3958. You can also check out our resources online. Go to our website, search for Your New Home, REO, FresnoHome.com. To friend us on Facebook, use Press 4 keywords.
Friend Valleywide on Facebook.
Or use Press 4 keywords.
KMJ, call Valleywide.
To get connected to us anytime. Kate and I, and eventually Michelle, would love to hear from you. A big thank you to our special co-host, Kate Island from UBS Financial Services. You can call Kate, 559-248-4097. Again, 559-248-4097. A big thank you to Johnny B. You rock,
Thanks,
buddy.
Johnny.
Great job.
Happy New Year.
Yeah, Happy New Year, buddy. Woo-hoo. Our goal at the Real Estate Radio Network is to get you, our listeners, the timely and accurate truth about your local real estate market so we can help bring you
back home.
Atta girl. Don't forget to tune into the Real Estate Radio Network next Sunday at 7 a.m. right here on 105.9, the FM KMJ. Make it a great day, Central Valley, and we will see you next week.
The preceding program was paid for by the Real Estate Radio Network.